Today is going to be a little bit different from most of the clinic stuff in the following way. Excuse me. My my experience with this subject is, what's a good word? Liquidity is for some people it's really straightforward, and for some people it just doesn't make sense. And so I guess what I'm driving at here, if you're new to order flow trading, jumping straight to liquidity is probably not a great idea. At least in my experience, I struggled with it a lot, and everybody that I've tried to teach it to, it has to come at the right time. And from my point of view, and everything is subjective, but this topic's particularly subjective because depending on your age, how long you've been trading futures, what platforms you've used, how deep your knowledge is of order flow and the CME, there's a lot of debate on this stuff, and a lot of the debaters have no idea what they're talking about. So there's a lot of misinformation. So given that kind of tortuous introduction, what I want to do is just explain to you where I have found it useful and where it plugged into my kind of learning curve with respect to order flow. And I'm going to do it from the perspective primarily of Jigsaw and Auction Vista Heat Map, there's one right there. But Bookmap looks very much the same, except it's full of real flashy graphics features, some of which, by the way, are total nonsense. They just sound great, like iceberg trackers and stuff like that. So understand this entire preamble that order flow trading is an art, and understanding liquidity is like an art within the art of order flow trading. Okay, so in the early days when I first started watching liquidity, I found it distracting. It often put me on the wrong side of a situation that I was on the right side until I looked at liquidity. And there's a reason for that. What can seem logical in the world of liquidity often isn't. Like, why would a large block of buyers or sellers, why would that act as a magnet? Which it does under certain situations. But the intuition that you will have just looking at it is that it's going to work like support and resistance, particularly if you're coming from the technical analysis world. And it couldn't be further from the truth. It doesn't work anything like that. There's a lot of misdirection plays going on in liquidity. People are putting up spoofs. Yes, that's illegal. They do it anyway, and today that's less important because the tools are better. But, 5-8 years ago, being able to put up spoofing orders, you could make money just doing that, and people did, So anyway, that's kind of my introduction to the topic. We're gonna, as we mentioned to you every time we've talked about the schedule, we've broken this topic into two pieces. Lee is here. He's primarily going to do the second half, which is kind of the more under the cover stuff. And this session, I'm going to talk mostly about how liquidity is useful early in your trading or plugging it in when you get to the right spot. So that's kind of be what I'm going to focus on. And a couple of the different ways you can look at liquidity tools, again, focus primarily on Auction Vista in Jigsaw. Okay, so feel free to jump in anytime here, Lee, if you'd like, if you have anything to add. Open questions, guys, just throw them in as they come up. I'm going to do this, as I said, very informally because it's kind of a topic that lends itself to being informal. Okay, so given all that stuff, let's get started. First of all, some terms are probably useful. So let's bring up, this is Jigsaw's Auction Vista heat map, and this particular one is for the ES, and there's a lot of different settings I can use, and I'm not going to go into all that yet. I just want to kind of give you a basic introduction to what it is that this is. And I also want to make some points about how I have learned it and some of the mistakes I made learning it the wrong way. Like thinking that, this liquidity that was right there that just disappeared was support. It's not, let's make that a little bit wider. Okay, so this stripe down here is just where I was temporarily disconnected, or I restarted a session. And that's what this line is too, so don't pay any attention to those. The connection at Rhythmic's been a little bit flaky this week, just these flash disconnects that are instantly reconnected. So anyway, you might see that while we're talking about this. Okay, now, a couple of other things. As I said, there's a lot of ways to look at this information. Let's start with a few simple things. If you watch the dome and you see, let me turn the spotlight guy on. Oh, where did you go? There you are. Okay. So if you watch the dome, and let's just use ES for fun here, and right over here kind of in gray are the bids, and over here are the asks. And basically what I'm trying to do is I want to be able to see them relatively. That's why I like this 300 sticking out, but I don't want them emphasized. That's why I grade them out. On a lot of platforms, they're much more emphasized, and they shouldn't be, because again, that's just like what people say they're going to do. It's not what they necessarily are going to do or they actually do. So like there's a big bid down here that's 3 times everybody else, and that's what you can see right there. So if I kind of put my mouse on it, you'll see it'll highlight. So I'm over here on this liquidity map on the right, and you can see as I move, it's moving in my dome. So that big white line down there represents this guy right here. And that could be real, it might not be real, but if you look at that and say, oh, there's support there, and it traded away from there before, you're gonna make the wrong decision. It doesn't work like that with liquidity. The way it works is important to understand, and I'm gonna get to how it works by telling you what it's not. Okay, so it is not a progression of time. You don't read a liquidity chart from left to right like you would read a technical analysis chart. You read it up and down like you do in pretty much everything in order flow. So what's important is that there was, for example, a lot of liquidity up here earlier. What is that, up yesterday, and I was turned off during the evening, but when I have my machine on, it tracks it overnight too. So that was that area around 50 that got sold yesterday. So that makes sense. And you can see a lot of people would have been willing to sell up there. So it's the vertical stuff that matters. It's not the kind of real time that happens. Like there's this liquidity again there. Let's go back to the dome. See that big white line, he's back. He's right there. He's on the bid. So now he was the inside bid there for just a moment. And watch what's probably going to happen. There's a lot of selling right there. We'll probably trade right through him. So not only is it not support, it's the exact opposite of support. It just means somebody's buying there. He may have nothing to do with day trading, and there we go. We just plowed right through that. That was a perfect example of what my point is, and it just happened to happen while the class is running, and I love that. Okay, so everybody, what just happened? We just took out major liquidity on the way down, and you can see there it was, and it just got sold, and we plowed right through it. So looking at that as support will do exactly the wrong thing for you. So like if you were up here saying, well, I'm going to buy down there, guess what? You got hosed. That's what happens. It is not technical analysis. It is a map, and that's why the word map is so important. It's not a chart. It's a map of people's intentions. And if you think of it that way, it will keep you out of significant trouble. Do not think of this as support or resistance. Do not think of people's intentions as being reality. That guy actually filled there for, he could have been closing out a position from yesterday or whatnot. What the heck is going on in Zoom? There we go. So anyway, key point, the first key point is that liquidity doesn't mean support or resistance. It often means the opposite. So you can't look at this and make a trading decision. It's just another piece of the puzzle. And if we go back up and look at where that happened as it was selling through, which is way back up here, right? You can see, look at all that sell volume right there. So that's what you need to understand, not the fact that there was just liquidity that got taken out. That's only a tiny piece of what happened. Okay? So let's go back. And that happened exactly at the right time. So that's cool. Let's go look at a few other things here. So one of the other things that Jigsaw does pretty well, and again, Bookmap does pretty much the same thing, and I'll just tune them down a little bit, but these circles represent big blocks of trading. And, if I filter down, I can get it to the point where it only shows me the actual biggest ones, like the one we just saw. Or, you can see as much as you want. And what these represent, hold on a second here. This is lagging a bit. You have something you want to throw in there?
I'm going to wait and see what you say next, Jeff.
Okay. That's interesting. These represent just blocks of big trades, and it can be useful to see or not. When this guy here, this is a better example. When this guy got taken out, remember, there was like 300 is what he was, and look at what happened right there on that spot. So he wasn't the only one, and it just plowed right through there. So,
and Jeff, I think it's worth reinforcing to people that this view, whether it's Bookmap or Auction Vista, we're seeing the liquidity as the background colors, but the circles are traded volume.
Oh, yes. I'm going to explain what all the different things are in just a second. Yes. I just wanted to kind of element by element introduce it, but you're right. Thank you. Okay. So first of all, in this color scheme, and we'll just talk about my color scheme, there's a lot of other ones out there. The whiter the color is, the more liquidity there is. So if you are looking like right now, look at, there's a 400 right down there at 21.25, and that's that big white line. And as it trades through it, it'll go away like it just did up here as that 300 got taken out. And as people like flash up liquidity and then pull it, you'll see it, turn white and then disappear. A better one, if you want to watch that, is MES, because they play a lot more games with the short-term liquidity there. And so this is MES, and I run it a little faster. I run it on an interval of 5 seconds because there's a lot more games. You'll see liquidity, and then we'll start to tick up there, and they just disappear up to here. And I've spoken about this a bunch. There's paid liquidity providers in the micros that don't exist in the bigger contracts. And so that creates a whole different environment. And so this is not a topic you will understand in 1 hour-and-a-half session. All I'm going to do today is give you the broad strokes about what all the pieces are. So once again, let's stay with MES just because it'll be a little more colorful to watch. And okay, so darker colors, less liquidity, white or brighter colors, more liquidity. The circles actually, as Lee pointed out, represent traded volume. So that's the beauty of Auction Vista. And again, Bookmap has something similar. You can not only be looking at people's intentions, but you can look at what happened there. So, for example, when we sold through that level right there, you can see there was liquidity there. It got taken out. Some people tried to come in underneath it. They got taken out. And then here's where we stabilized back down to ebb and flow. And it's really clear, how that happened and all the different volume events around it if you just understand what you're seeing. So let me throw a few other things in. In Jigsaw, you can select other screen elements, and I'm just going to make them wider here so you guys can see. And the first thing I'm going to do is just turn them all off. So now we just have nothing but the liquidity map. And one of the things people like to see is cumulative delta. So that is there it is. Okay, so that's cumulative delta. And again, this is one of those ones where on one instrument, it looks different. So if we go back to the ES, the cumulative delta looks much more interesting there. So there's definitely an instrument personality component to this. So what I have down here at the bottom is that's cumulative delta. And then this is just the volume. And Jigsaw, like many platforms, will split it up into buy and sell for you. So let's stretch this out so we can just see it a little better. All right, so these are buy-sell volume. And this is useful for seeing high volume reversals. And you've heard me talk about that all the time. We'll push up and we'll find liquidity and then we'll turn and head down. And that was an example of one right there. And it was a little tiny high volume node. Usually they're a little more aggressive than that. Maybe we'll get a chance to see one. Let's spread out a little bit faster here. Yeah, then now you can see this one really clearly. That's where we first saw that 300 that looked like support. And also remember what I said about it being a magnet. We were up here. Those kinds of big offers, or on the other side as well, they will often act as attraction. And I'll let Lee go into more of the why, which really isn't important. It just does. And particularly if we're heading that way aggressively, with everything in order flow, when we get to an inflection point, you want to see what happens. And this was like, you could just see that guy was going to get sold through. Go back and watch the recording. It was an easy place to just get short because clearly we were going to plow through that. And, these iceberg tools would have been telling you to buy it, which would have been just insane because you would have got just run over there. So anyway, all right, other things that you see. Again, this is cum delta. I like bar by bar delta, as you guys know, so I don't really use that one too much. I do like this tool, which is called the flip chart, and I can set the flip chart to a variety of different parameters. Again, this is Jigsaw's way of doing it. But what I'm doing here is I'm just looking at the change in the order book. Okay, so this is not representing traded volume. It's representing right now. So let's leave it there and watch the dome. It's representing the changes in the book right here. So if more sells are getting added or more buys are getting added, that's what I will see. So right now, sells are getting added. That's why it's red. And so, it's struggling to go up, as it will do when sells are getting added because people are selling into any upticks. Now, if that turns blue here, that's the other way around. And then what's happening is people are adding to their bids as we're going up. So that's called a flip chart. And it's just a quick way of sensing whether the demand or the supply is shifting. Okay? And if you combine that with volume, often it can be a really good tool to see a turn. If liquidity comes in underneath it, that's what you're seeing here. This is trying to hold a bottom. So what you could do here is you could get long with a really tight stop. Maybe even that stop should be up there because that'll probably trade through if we get down there. And, and see if you can pick up a few ticks. You should be able to get 3 or 4 ticks here, but, the selling has been aggressive, so maybe not. We'll see what happens. You want to see that point get held, and that's what the flip chart's trying to show here. Let's just try to catch a 1 ticker just for example here and see if we can do it. Not a great spot. This could go either way, but I'm just showing you an example of how to read this right now. See, it's slightly blue, so we should get our tick here. Boom, we did. Okay, so there's an example of how you could pick a tick off and do that with a 10 lot, make $100 just on this setup here in the liquidity. So the only thing that I'm seeing here that told me that could happen was the selling slowed down and the flip chart tapered up and a tiny bit of buyers came in, and that's all it will take to start pushing us up and start triggering the people that are short their buy stops. And right now that's not happening yet, but it might. Here, let's watch it. It was enough to catch a tick, but there's no aggression on the buy side, basically. But, liquidity's right there. So see how the big guys are trying to put themselves right on the bid and ask? And they're on both sides right now. There's size on both sides. Rare that you see that. That's a battle of large people that you want to stay out of the way. But the lean is definitely to the upside right now. It will take a big block sell to push this down. That's what this is telling you. Otherwise, and now look at the flip chart. And if you threw up the cumulative delta here, you should see that strongly going up if we're going to get a pop up. Otherwise, it's just going to get sold right down through and we'll take the low out again. So that's the kind of stuff you can get off just reading this, nothing else. You don't have to look at any charts. You don't need any indicators. You can just look at the liquidity and read that you've got a great long entry here with a really tight stop. And if it breaks down again, who knows? It's not a great short. There's too much interest. See, look at the change in the flip chart from being very red to being very blue. So, and cumulative delta is telling you nothing. That's why most of the time I don't even have it on. And I do want to see the volume when I'm doing this because a high volume event with a change in the book, in this case to the buy side, is enough to push you, 1, 4 ticks, and there it goes. Okay, so we just went up, 8 ticks, just like that. Right, and this high volume node held us. And now that might be the end of it. That trade's over. But you can see how it's set up. And now you can see, people are getting stopped out. The guys that were short down there are running for cover. So that was a perfect example of how just liquidity can give you an edge, but it's really different the way you read it. It has nothing to do with the price. It has nothing to do with the pattern. The ebb and flow can be important, but what really is important to watch is for a change in the liquidity. As you can see down here, everybody wanted to get short and get on the sell side of the tape, and that just changed right here, visibly. So that's what I like to watch for the short term. Obviously, you can take all of those concepts and integrate them into the long term if you wanted to. We're watching this is a 7-second interval is what each one of these bars is. But again, you don't do this like a time chart. So, you don't go out to 30 seconds or 15 seconds. At that point, it's useless. It's way too crushed together, and the time horizon is only going to tell you what the extreme fringes look like. So this is a 16-second. You can see the liquidity coming in, you can see the buy, but everything that we just saw is all smushed together. So generally you want to watch this pretty quickly, 10 seconds or less. I use 10 seconds to 15 on ES, and on MES I use 5. And that looks like this. So, and again, you can see how you could really dial into that turn down there just by watching the order book. Nothing else, and you had a really perfect long entry that might continue to work. I mean, this could go all the way to the other end of the range. I'm not even looking at the structure. This was literally the only reason that I saw along there was the change in the order book. And again, let's look at the flip chart, and you can see how it just was a completely different personality. See it, and now it's unclear what's going to happen next, at least on the MES. Whereas over here on the ES, it's a little clearer, and that's one of the reasons I watch both of them, because there's different types of games played on each one, which I know we say this over and over again, but I'll tell you what, guys, it's pretty much impossible to read liquidity without a lot of seat time staring at the liquidity. So here, what I'm going to do is I'm just going to take off. So here's just the flip chart on ES and the flip chart on MES. And you can see how everything's on the buy side now, right? So that trade is still working. But if I go over here and say, all right, rather than watching the flip chart in the ES, let's watch the volume, just the volume, okay? And you can see it's tapering down again there after that little action, and the liquidity is now above us. So what I want to do over here is watch for a potential to maybe short that. If this little pop-up runs out of steam or runs back into more sellers. So one of the questions I'm anticipating, and I'm already answering it, is it useful to see, two different derivatives of the same thing, like MES and ES at the same time? And absolutely it is. It's just like watching the domes next to each other. You can see a lot of stuff that's hard to see other ways. And my favorite way is flip chart in MES, just volume, and sometimes cumulative delta in ES to get an idea if we're trending or not. You can see a little bit of an upward trend in the cumulative delta there. All right, and yes, I know this is another one of the fire hose sessions. It's intended to be a fire hose sessions. This is a clinic. It's an introduction to reading a map of the order book in any instrument, and I will show you some others, yes, in a minute. We are going to pause for questions, and we are going to take a break also in about 5 minutes. So let's see. I'm going to go back, and I haven't looked at the questions. That's the first time I'm doing it. Okay. Yeah, this is a huge concept, that there's no spoon, Amy. Good way to put it. It's definitely the matrix. But, don't sit down and imagine you're going to look at the Auction Vista or Bookmap or whatever in Sierra, and you're going to be able to read like that long that I just did the way I just did it. That's going to be a year from now, okay? This is hard stuff to learn because it's so different than everything else. it's really a map of psychology at any given moment of the market. And that's the way I like to think of it. What are people spoofing? What are they advertising they want to buy and sell? So, right now, just pull up the ES, and, right now people are happy to sell, or at least advertise selling right in this area, which is obvious why that we broke down from that area up there, and that's we're retesting that breakdown, and nobody's interested in buying until all the way down like 10-14. At least they're not advertising it. So that tells me we probably have more downside to go. Again, I would look at the structure and I would qualify that, but today's just about liquidity. You have to learn to read all the different pieces and assemble them. So okay. Yes, critical. Liquidity is not support and resistance. Get that out of your head. In fact, the best way to think of it is that it's probably the opposite, like the way that 300 lot guy got taken out and we traded right through him. I mean, I'm so glad we caught that on video. That's going to be an example for the best of live trading events, because it was just perfect. Let's see, what else? Okay, so Anita, what about when it happens at a major IP? Actually, yeah, Amy's right. It generally is an IP, but again, it's the everything combined, Anita. You have to look at, okay, we've got an IP, so what's the structure? What's the liquidity look like? That's the art of discretionary trading, is assembling all those notions together quickly and making a trading decision and then a quality decision on that setup. Do I have a setup? Like right there, shorting through that liquidity that I showed you that we just plowed down through. That's one of my favorite setups to do, and it's also a component of the inside out kind of idea that Lee likes. And if you were looking at that structurally, it would give you some more pieces to the puzzle, but to take that setup, you didn't need them. I didn't need the LRCs, excuse me. I didn't need to know where anything was, first hour high, low, nothing, just the high volume node I was playing and the liquidity right there. That's a way all by itself you can game an inflection point once you develop that skill. Okay, yes, critical. Amy's making really good points. Go back and watch this over and over again and understand that the big trade circles are history, and they're the least important part of this, but they can help you see patterns. What do I mean by that? Like, look at buyers getting trapped up here, and that one right there. That was a buy side, and so is that one, and those longs got just plowed down. And then when this seller here got taken out, frequently you'll see that, and now we're back in ebb and flow, and we'll probably stay here for a while. This is very common. But a different instrument like NQ, oh boy, that's just a totally different game. And we'll talk about NQ, but its order book is just, this is great to learn how to read, but it's a totally different, it's nightmarish until you understand how to read it. So we'll come back to NQ in a minute. Anyway, so let me look at some more questions. What would the flip chart equivalent to be called in Sierra chart? Lee, can you answer that one?
Yeah, let me first qualify from you, Jeff. Is the bars in the flip charts, are they showing the pulling and stacking, or are they showing the depth?
You can do it either way. I have mine set up, and I'll show you my settings in a second. So for example, over here on this flip chart on MES, that's running off of the DOM. So if you go here and you go to your settings, the little tool, and yeah, that's a great question. I'm glad I started to explain that and then I got distracted. There's a lot of elements and levels to this conversation. So, okay, so if we go to Auction Vista, and if you look at the flip, I am currently setting it to a 5-level snapshot. And so the snapshot.
Yeah, but what's it calculating?
Okay, it's calculating, in this case, it's calculating what and let me send you guys to the help for this too, because it will help if I don't try to do it live and some of you can read it. Hang on one second. Okay. If you go here and, okay, Auction Vista. Oh, sorry, give me a second. Chart components. Okay, flip chart shows order book activity. For example, when the buyers stack the bids and the sellers pull offers.
So it's pulling and stacking. Okay.
It's pulling and stacking. Okay.
Right.
Hang on.
So to answer Stephen's question, on Sierra, we can see the pulling and stacking at each price level in the dome. There isn't a study that shows this horizontally, which is what Auction Vista is doing. Auction Vista is taking that and doing a slice over time on a 7 seconds chart, effectively.
Exactly. And in Jigsaw, you can put it on the dome too. I chose to not have it there because I find it distracting there. What's beautiful about it here, where I have it on the Auction Vista, is, as you just said, Lee, you can see a summary of it. Seeing it at each price level is really distracting.
So to Stephen's question, we can see that, well, God, now it gets to be a subtlety as well, doesn't it? Because if we are snapshotting the change, you can also see the same thing by looking at how depth is changing over time if you're aggregating up 5 levels.
And that's another thing that's in Jigsaw that I don't use at all. But here it is. And here you can either show it as an imbalance or not, and you can choose how many levels. So this is more what you're talking about that Sierra does. I can say, okay, I don't want to see the imbalances. I actually want to see all of the stacking and pulling for 5 levels. So that's the setting there. And then I'll go back to this guy and we'll see depth. And so there it is right there, real time, as it's happening. That's depth. So you see it stacking and pulling, and you can see my flip chart is just summarizing the net of it over the interval of this bar. And see, so it's a very different picture. I don't find the lower one useful at all. It's a total waste of time for me. Whereas this is really useful because this is pulling out of this situation right now that there's buying, and it's impossible to see that for me on this. Maybe it is for you guys, easier, but this is much more informative than that. So anyway, but they're both there, and you can also do something else, if you like. What you can do for that is you can say, all right, show me the imbalances. So that's just going to net it out for how many levels I want. So let's do imbalances and let's do 3 levels. So that's pretty tight, what's going to happen pretty soon, right? And then let's go back and look at that. And so now this is my flip chart, and then this is just my imbalances and just 3 levels each way, or 2 from the inside bid out. And that is a little more informative now. So you can kind of see the trend in it. But again, I submit to everybody watching this that this is a much better picture than that. But, it's personal preference. Want to add anything to that, Lee, or clarify anything, Sierra?
Yeah, I think the thing to understand here is, first of all, you've actually got to understand what the components of this information are. So Jigsaw is looking at the pulling and stacking of orders at each price level, which is hard to track on the dome in real time. It's then saying, let's accumulate this over X number of levels. How many, how close to the inside market we want to be for it to be important? 2, 5, 3, don't know. And then let's time slice this over 7 seconds. So we're smoothing a lot of the data. But there are ways and means of doing much the same thing in Sierra, whether you want to see it horizontally or just a summary. But I think what's crucial is you actually understand what this is showing and how it's calculated, because this flip chart is a summary of what's going on, updated every 7 seconds. So
or whatever interval. Yeah. In this particular case, like this one is 5 seconds for MES, and then over here, let's bring NQ or ES back up. And so that's a critical point, and that's why it's so powerful. If I say, let's look at 15 seconds over here on ES, and let's take the cumulative off. And for this one, let's put the volume up, and let's look at the stack and pull thing. And let's look at it net that same way. And so let's watch that. And so, as long as and that's a critical point Lee's making, you have to know what it is you're looking at and what it's telling you. Otherwise, it's just going to distract you. It's not volume. The volume is the volume. But these flip and order book displays, you really have to tune in to what it is you want to see. And this goes back to that notion, once again, that good professional traders don't start with the tool and find setups. They find setups in the price action, and then they look at the tool for more information, like I did when I took that long scalp back there. I was looking to see that liquidity was on the side that I was on, and in fact it was, so that made that a decent setup to take. Okay, is everybody keeping up with us here? Let's see. Let's go back to questions.
Scott has actually just messaged me privately saying that in Sierra chart, okay, numbers, bars, calculated values too, technical reference, has the sum of stacking and pulling. So actually, yeah, you could do much the same thing on a fast chart. That makes sense.
Okay, yeah. This is one of the reasons I have said also what I've said before. For the $500 for me, Jigsaw is just a perfect set of tools, and you can save yourself a lot of aggravation, not rebuilding it. On the other hand, there's some good templates out there from Totino Trader and yada, yada, yada. There are ways to do this on Sierra if you wanted to do that. I remain an advocate for doing both, simply because in some of the data feed weirdness that's happened, or if somebody's platform's quirky, it takes me 10 seconds to switch Jigsaw from coming through Ninja to CQG over on Sierra, and then I just have to shut Sierra off and I'm good. So it gives you a lot of alternatives, and that's something to think about going forward. So, all right, let's cover some of the other questions. So, preferred methodology for days of ebb and flow? No, not exactly, Darwin. I would say all of these tools are great tools for any type of price action. If you do have an ebb and flow day, the liquidity is probably the best way of keeping an eye on it in conjunction with market structure. If you know for a fact you've got unfinished business at one end, and and we're in the middle and we're pushing that direction, and liquidity says, yeah, that's probably the direction we're going, then you're firing on all cylinders, if that makes any sense. Could you make that trade decision just with the 15-second bar chart? You could. You don't need any of the other stuff to do that, but you get better at it and you get more accurate when you start adding other tools to your toolbox. Here's one example I can give you just from my car experience. I raced cars when I was a teenager and in my early 20s, and so I know a lot about internal combustion engines and fuel and carburetors and fuel injection and all that crap. And that's all well and good. I can hear a motor and know what's wrong with it just by the way it sounds. If it's a motor, I know. But now, I just took my Scion over to get smogged, and the guy plugs in this meter into the, the little port, and it tells him everything about my Scion in 30 seconds that, I'd have to drive it for an hour and listen with the windows rolled down, and I may or may not get it right. So that's a good example of how, your intuition and your experience can get you the right answer pretty quickly. But sometimes, there's a sophisticated tool that'll do it for you perfectly, or there's pieces of tools that could really help. Like, look at MES right now. Okay, everybody look over here on my MES liquidity. Look at the flip chart. If you're short, you should be scared to death because you're getting stacked against you. That's how you get squeezed when you're on the, and even though there's liquidity up there, we're probably going to come up and get it, and here we go. That's what happens. The liquidity is right up there at the other end of the high volume node, and the shorts, here comes the blocks. The shorts get taken out, and then once they're out, the sellers come back in. So yes, it's a good way to watch ebb and flow, but you really have to understand your toolbox. Okay, let's see, other questions. Possible inflection points. It's useful for that, and ranges. It's useful for that. Just make sure that you don't let the settings distract you. I've got a really fast MES Auction Vista map here, and it's showing me some really cool spots I could lean on for ebb and flow trades in this range. But beyond that, I would be warning you not to read too much into that one without also seeing what the big boy is doing, and it looks different. There's liquidity down here and liquidity above us up there, and so you get a different picture, and you have to just learn to synthesize. Lee, are you about to say something?
No, sorry, I'm typing. I'll mute myself.
Oh, okay. All right. Jump in anytime. Yeah, your contributions are welcome and appropriate. Feel free to interrupt me. You can practice. Okay, so All right, so we answered Summer's question. Let's see, what was Maria's question that I didn't get to? It's nap time already? No. Oh, do I use cumulative sum of all resting orders? All right, yeah, we did answer that one. It depends on how you have it set. And I showed you the settings I like. I like to see the change, and I like to see it fairly tight, within a few levels, because going a lot of levels out is meaningless. You end up with, all the big spoofers or the market makers in the micros, the guys getting paid for liquidity, not really market makers. And that's the beauty of the MES. It's such a different picture. And you can see, look, if you just watch what the liquidity providers are doing, and you've seen me do this over and over again in live tape reads, and just they're smarter than you are. So if they're down here, and they're up here, you're going to be in the middle trading here. But, it's not stupid to just do that. And, as we get down there, reassess it and see if it's still a good call. That's all they're doing. That's literally what they're doing. And, we've got a beautiful high volume node. I'm not even looking for setups, and this could be a really sweet, way to play this. Let's see, we'd sell there, and I'm just looking for where the liquidity is. And so, remember that coincides 25 with what the big boys are doing. They want to sell that spot too. So this is actually, a couple of good setups, and now I could just wait and see if they get filled. So that goes back to Darwin's question about, using this to play the ebb and flow. This is one way to do it right here. Oh, see, look at that. It teased me. It came down within 2 ticks of me and then popped right back up. So what is that telling me? That's telling me that my liquidity read is absolutely perfect. It's doing exactly what I wanted it to. I missed by 2 ticks. So I was a little bit, this would have been a better spot, in other words. So let's try it this time on the way down, see if we can get it. Just for fun, we'll do a live example of this concept. Okay, so there we go. Now we're long, and let's see if we can grab 2 ticks real fast. We'll definitely be able to get 1. That's a no-brainer, but let's see if we fill this guy. Okay, now we are building the range out here. And this is where you need to be careful. When it starts getting volatile, you can end up on the wrong side. But I don't think this is going to be an example of that. Let's just put them both there so we can exit the position profitably quickly, if in fact we're going to do that. And, watch the liquidity over here and see what happens. It's choppy and boom. Okay, we're about to get filled on our long. There's 1. Oh, come on. Let's grab the other one. You could let this one go for a runner, which you're not going to get. So there we go. Okay, so we just got a couple of ticks on a couple of contracts there. Anyway, you get the idea. You could trade just off liquidity and nothing else, particularly this time of the day when we're not going anywhere anyway. That's what I do when I'm scalping. Anyway, I don't use liquidity at the open, like the open 5. It's way too distracting. It's changing too quickly. So that's a good tip. No liquidity at the open. Doesn't matter. It's too fast. Another thing to keep in mind is that instruments like gold and oil, as usual, will be completely different because they're real commodities. So the structure of them will be a little more predictable. Like you can see here, this is gold. And that low down there was a real sweet long entry. So let's have a look at that real quick here. So let's see, let's put on the volume and let's look at the flip chart. And this is 8. Let's go back just a bit. So yeah, here's a really sweet example. Boy, look at that. So here's how, hold on one second, guys. What are you? It's not trash day. Why are you here? Got a big truck outside my window. Okay, let's see. Which is really rare in this neighborhood, which is nice. Okay, so now we can see a little better how, boy, look at that reversal right there. That was interesting. Anyway, this low that got sold down here, and you can see there was liquidity there before. It got eaten up and pushed down. This is a really good example of what I said, gold and oil overshoot inflection points. So here's gold overshooting a low, and then you can see the buyers just came in. Look at the difference in the flip chart, and it just pushed up. And that's a really good example of how you can catch some nice trades after the first hour or so in gold and oil. They often look like that. So that's gold, and let's just look at oil for fun. see if there's anything there. And that's true of most of the, the real hard commodities. Oh, wow, look at this. So this was oil selling down, and it's come into liquidity right here, right now. So this is actually an interesting spot to watch oil right this minute. Let me just see if we can catch a read on this. Yeah, this is probably not a bad spot to be long oil right here. Okay, so see if we can catch a tick in oil for 10 bucks. And boom, we got it. Okay, so there, oh, that was my sim account. Oh, well, I wanted to do that in my real account. I wanted that. That's called picking up $10 bills. That's what we do. That's most of my trading is stuff like that. I'll just pop open something and I'll say, oh, wow, cool, there's a trade there. And, that's all I need to see that there's a long there. And it could go farther, it could pull back, but that I could catch 2 ticks there, no brainer. So those are some ways you can just use the liquidity to see setups. And, and obviously you can get as detailed doing that as you want. Boy, I really like this oil setup. This could be a really sweet long in general. Let's go ahead and get long there and scale it, because this thing looks like it has legs. And so we'll catch 2 ticks on the first one and see if we can catch a runner through this liquidity down here. So and that's on in my other personal account, not the little baby one. So okay, we're about to fill here on the first one. See this high volume node? I'm just playing that it's holding, and unless the tape tells me something completely different, I'll stay with it. Okay, we're about to get 2 ticks on our first contract right there. Oh, we were number 8 in line. There's 52 ahead or behind me now, so I'm still in a good spot, but some sellers have entered. You can see the liquidity over there. You can see it's getting white and pushing down a little bit, and the flip's turning. So I'm still not worried, though, because price isn't changing. Those sellers are coming in, and they're not pushing it down. So that means my my long here is probably good. Let's get 2 ticks on the first one and 3 ticks on the second one and call it a day if we can do that. Okay, so, ooh, now I'm number 8 and number 51 out of 51. So let's take 1 tick on the first one and 2 ticks on the second one. Somebody's selling right on my entry here, and now he's gone. Okay, we should get fill right here. And the survey says, come on, wow. Oil usually pops faster than this. Which means I may be on the wrong side. Okay, there's the first one. Number 9. Come on, baby. There we go. Okay, so we got a tick on the first one, and we're about to get 2 ticks on the second one. We're number 8 out of 60 there. Watch the liquidity, though. I could get offsides cornered on this one. Let's watch that. And you can see with Jigsaw, my trades are right on the heat map too. You can see where my exit is and where my entry is. I don't have a stop right now, but if I did, you'd see that too. So let's just put a catastrophe stop down there, and then we'll reopen this. And so you can see that's that stop down there, and I can move it around. You can trade right off of this if you want to, but there we go. We're one more tick. We're about to get filled there. Come on, baby. You can you could watch a little faster if you want, and that's always fun. And okay, it traded again on my price. So now I'm number 4. You can see the queue right there. It's real small. Number 2, boom, we're filled. Okay. So there's just a couple of examples of how you could do that just to scalp. I mean, I literally have not looked at a chart. I've just been looking at the DOMs and the liquidity. Okay. And notice how my ES trade over here, it hasn't gotten to those extremes, although it might be about to right here. I still haven't gotten filled down there. I've been sitting down there trying to get filled twice now. It's tagged 1 tick above me, and I haven't gotten the entry. That's a good way to. I probably have the right spot because it's hard to buy there. And oh, cool, we got filled. Okay, so let's shoot for 2 ticks here on that one. And boom, there's 1, there's 2 ticks, there's 3 ticks. Okay, so you can do this all day, guys. Just look at the liquidity, just look at the price action. You don't need anything else. I am only staring at my DOMs. I have not looked at a chart, period. Darn, that oil trade, I should have left that puppy on. Shoulda, coulda, woulda, right? I think we found a good turning spot there. And, that's the beauty of liquidity. God, that would have been a sweet long 30. Geez, I don't even want to add up what that is. It's $10 a tick in oil, guys. Oh, well, we had a 2-lot on. Never do that. There's always another trade opportunity. All right, let's see. I see there's been some conversation already. Let me see. Okay, we got Darwin. We got, okay. Yes, I see a comment about heat maps and processing power. Absolutely. These are hogs. You want to run as few things as you can run. That I only open them when I'm going to watch them, and then I close them down. Like typically I have these two open, and if I want to watch something else there, I'll close that one too. Oh, NQ, I want to make sure I do talk about that, so I'll come back to that in a second. All right, let's see. Pulling stacking, yeah. Yeah, the dome, way too much. I agree, Stephen. Keeping it simple, Amy's point, I could not agree more. The less stuff you look at, the better. You know, for example, I'll just bring up the default format of the domes for Jigsaw and show you what they look like. Let's just pick the Jigsaw original. That's what it looks like, and you can see stacking and pulling. And here, let me get it so you guys can, there. And it's, to me, this is just way too complicated. I don't want to see, you know, at each price point stacking and pulling, which is what it's showing me here. I don't really care. I mean, I don't care that much about the bids and the asks. What I, you know, and it's just, there's way too much information on that. You know, if you look at, whoops, hang on. Oh, I should have one saved for this. ES June, I think that is it. Let's see. Hopefully that brings up the last one I had. I think that's him. Or not. All right. Well, whatever. You know what? I will fix this. The easy way to fix a problem like this, exit without saving and then just restart. And I also keep lots of copies of my templates. So let me just restart that, and then we'll go back to questions. All right, so let's see. Oh, yeah, as far as timing of when to learn, I see a conversation about when to start doing this. You know, that's part of your Bubba. I looked at the order book and liquidity when I first started trading order flow, like back in 2014, and I have as being, you know, too much information until like a year and a half ago. And then I started working on it again and found ways to integrate it back into my style. So, you know, I could trade completely without it. It just gives me an extra edge. But at the same time, you know, if I just watch it, I can see some really cool setups like you just saw without watching anything else, which is handy. If you're resource limited, you really need to give a lot of thought to what your Bubba is going to be and what kind of computer that takes. And, you know, the video game guy runs on a high-powered laptop. You know, he's got a real high-end gaming laptop when he's not at the prop firm where it's a desktop setup. But because he's just watching the domes. He has no charts. He has liquidity and the domes. So that doesn't take a lot of horsepower to run if that's all you're running. You know, for example, just running day trader, literally, that's real low overhead. So you really got to think it through. You know, what your style is and developing your Bubba and, you know, adding pieces to your Bubba as as your knowledge improves. But absolutely start as simple as you possibly can. There's just so many things you have to teach your brain. Yeah, you can put the stacking and pulling in one column on Jigsaw. I went from having it to having it in one column to getting rid of it altogether, Anita. That was my evolution in Jigsaw world. These domes that you see, it took me 6 months of daily trial and error to get to the stuff that I have on my domes, which is minimalist, and the color scheme that I have. And
you know what, Jeff? I'm going to set people a bit of homework for session 2 because everyone's getting excited about the raw data in different visualizations.
Okay.
And come to session 2 in a couple of weeks thinking about what edge could you gain by interpreting the raw data and how would you apply the information contained therein to your trading?
Good question. So here's an example. If you're a scalper, if you're me, and you've never used order book before, you've just looked at the 15-second chart, you're a boot camp graduate, maybe you've got Sierra and emoji stuff, maybe you don't, doesn't really matter. Is there a way you could just take this MES book with very simple settings and use it to enhance your scalping? And that's a really good question. And if so, what pieces would you use? Well, I just showed you a couple of them, just looking for high volume reversals and understanding, which side the book is flipping on can make or break a scalp all by itself. Just that one little view right there over on my right corner. Great idea, Lee. Great idea. Let me pop out and just do this before I forget. Let me show you NQ, because it's a totally different game. I have NQs crunched together, so the prices all run together, because you have to look at NQ in ranges. If you try to look at the order book for NQ the same as you would, with typical settings like I have for ES or MES, it looks like this, and it's impossible to read. It's just there's too much change, too many price levels, and it's moving too fast. So what you can do is scrunch it together and zoom out a little bit. And what that will do is it will give you ranges you can lean on. And that's how I use it in NQ. So I look at it and I say, all right, there's a big range up here I could lean on, and there's some liquidity under us, but after that, it's all the way down there at what? 32, and we're trading 39, so that's how I use it for NQ. I shrink it together and I watch for big blocks of liquidity way away from the current trade, and that's where I might put trades up and let it come to me. It's like 46, 47, there's liquidity up here. Let it see if it comes up. Again, this is a buy tape, so this would be a fade. If it got filled, and then same concept down at the other end of the liquidity. Wow, it's way down there, isn't it? Like here. Okay, so now you can kind of see if it comes to you. This is one way this is how I video game scalp the NQ. What are your size filters on NQ, Jeff? 10.
Okay.
10 or more, and I'm using NQ, but this is the book for MNQ. So. Yeah, all I want to see is 10 or more there, because anything less than that isn't very significant. And if anybody's going to move the price, they're going to need blocks of 10 to do it. That's why I watch that. And you can see the liquidity guy right there, the same spot I'm at. He's hoping the same thing happens that I think is going to happen. So let's see what happens here if we get a fill. Just for fun, let's force a fill. Okay, so all we're doing is trying to catch the other direction, So it's ebb and flow, and we're trying to, sell one extreme and catch some ticks. By 2 again. I do that a lot when I'm trying to teach, don't I? There we go. Okay, so we got, 8 ticks there. Just, and all I'm doing is watching liquidity and just scalping the extremes of the liquidity. That's all. So that's something you can do in NQ. I wouldn't recommend that anywhere else. It works in NQ. Maybe in MYM, but YM is a whole nother animal that we'll talk about some other time. My favorite instruments for any of these types of things are, for scalping structure, ES, for scalping structure using the market maker liquidity guys, MES. For video game scalping, I like NQ. I just showed you an example of that. And for market profile, structural trades and scalps for both oil and gold, I like to play it that way. So I like to let the day get started and then look for, an open 5B or something there. And those typically play out pretty nicely. So like, let's look at gold. Open 5B was a really great trade, last couple of times today. So that would be a place where, I'd be watching the liquidity. And same thing in oil. You saw I had that little long down here. And, obviously this would have been an interesting spot to just stay short. But, with oil, you got to just be careful. It tends to overrun itself. It gets ahead of itself. All right. So let's see, what other questions do we have here? Running on a gaming laptop and wondering about upgrading. Yeah, I'm a fan of desktops because I can get a lot more power from, bang for my buck, and they run cooler, and I can change components. But, I get having a high-end laptop if you're moving around and just, a spare monitor connected to it. That's a really personal decision that, everybody has to really think through the options and make themselves. Back when I was a really active trader in the ES and the YM, when I was trading 50 lots, I did both. I had a really high-end desktop, actually a few of them, like I do now, and then I had a really high-end laptop and a extra monitor that I sometimes took with me when I was going to be gone for a day or two, so you could do that if you have the resources to do that. All right, so let's see. I'm going to look at some more questions, and we're getting close to wrapping this guy up here. So let's see. Good homework, good questions. In Q, I use liquidity as resistance. Not exactly. No, I'm not doing that. What I'm doing, again, Anita, I could see why you think that, but that's not what I'm doing. What I'm doing is I'm using liquidity to play the range, not as resistance, but I'm using the liquidity to tell me what the range is, and then I'm just fading the range. I'm not using it as support or resistance. Bad words anywhere in the conversation about order flow. Because I'm not up there because there's one guy up there with one big selling order. I'm up there because everybody's up there, and it will take a lot of energy to get through there. So it's a way to just play the ebb and flow. But you're not using it as support and resistance because it can change instantly. The book can just disappear underneath you, and and you have to understand what that means. So you're on the right track, but that's a beginning understanding.
I guess potential inflection points is a way of thinking about it, because
exactly,
we are seeing people intimating that they might play.
Yes, and groups of them. That's the key with NQ, is that there's a lot of bots in NQ, and one of the most common bots does exactly what I just described, and that's one of the reasons I do it too. And on the MNQ, you can see where the bots are going to be by looking for where the liquidity providers are. Wherever they pop up, like right now he's at 44, and I didn't see where the bottom one was. Let's see. And you gotta get pretty fast to see it, but let's see. Okay, yeah, now we can see them. See, you can see them popping up in here. And then the liquidity guy is just the top of that. And I can just tell because I know his behavior. I can just see how he does that. He's just above it. See, now he's at 47. And that's what he'll do. He'll let, orders get below him. And, then he's fulfilling his contract with the CME. And so if you watch those guys, you can see really cool little ebb and flow ranges. And so that's what I'm playing. It's not support and resistance. I'm playing the range based on the advertisement of the intentions, as Lee said. And, if we get up there and it goes the other way, I'm the first guy to get out of the way, because that's how you can really get run over. But, absent getting run over, it's a good little strategy to play range. Okay. Wasn't the 2010 flash crash caused by a single trader spoofing? There's been a few instances of that. And one of them, yes, was based on some spoofing. And that's one of the reasons there's regulations against spoofing. But here's the problem with the regulations. It's really hard to prove if somebody's doing it. And, I've learned to just assume that, that the order book is mostly bullshit. And then it really doesn't matter if they're spoofing or they're, or they're actually going to trade. We'll find out if they're for real when we trade there. That's what the mentality you have to have. All right, what other questions, comments, burning desires do we have? We're going on 2 hours and 15 minutes, right? No, 1 hour and 45 minutes. So that's not too bad. And there's that damn truck again. Who are you and why are you on my street?
I think it's the Viagra delivery, Jeff.
Yeah, really. Oh, it's the guy that comes for the green recycling, the cuttings and all that. Okay, I haven't seen him yet. That's the first time I've seen him. All right, so all the gardener recycling. Anyway, so what other questions, comments? Thank you for the feedback. Appreciate it. I hope, my intention here was to give you just an overview of liquidity. And I think we did that. What do you think, Lee? Is there anything we missed on just the broad
Yeah, I
strokes?
think this was good because Bookmap and Auction Vista, blah blah blah. All of these tools look sexy, but they don't really explain the visual elements. And we've started now to explain, here's the tool, here are the visual elements, and here is an inkling of what you may start to use them for.
Yep. I think, and that's my problem with Bookmap. That they'll tell you if you read their promotional crap that that this high volume node, the circle showing high traded volume, that this is a trading signal, and they'll have 15 different ways you can trade it, and it's all bullshit. It's just a piece of the puzzle. And so don't leave here and go out and watch a bunch of YouTube videos on liquidity on the internet, because you're going to get a lot of information that's wrong. A lot of the videos out there on this topic are wrong. Yeah. Would you agree with that, Lee?
Yeah, totally. And it's an easy trap to fall into on liquidity, going, I must have all these visuals, and before you know it, your brain explodes. And something I'll go into in my session is how I went through that process and really started to drill down into the important bits of information and how I use them, which is why I've set this homework, because for me, I'm really interested in liquidity, and I don't want to see 99% of the information.
Yep, I totally agree. I want to see where there's potential inflection points that I can scout. Shows me. And then there's a example workshop last year where I was doing an NQ one, and I glanced at it. I don't even know if I mentioned it, but that's the one that went like $1,000, on one lot. Is a lot of times, you can liquidity can give you that element that makes a setup, instead of a pair of jacks, it makes it an ace king, because it's just that missing piece that like I'm massively long in gold right now for a couple of days. But basically, I bought, and I said this a few times last week, I've been accumulating triple gold ETFs down here every time, we pull back into any sort of ebb and flow. And so this is a real sweet move that we've had the last few days. But even within that, if you just look at what's happening today and the liquidity, you could see all the spots that were perfect places to jump on and catch that long train. I mean, look at here, like this liquidity down here, and it got bought, and then the liquidity under us here, and now it's getting bought again. It's definitely a good tool if you don't try to read it like a chart. You have to read it as what it is. It's a map of intentions that may or may not happen, but it can definitely give you additional pieces of edge. Am I going to post my latest? I think I did, but it's changed a little bit. Yeah, I'll post again in a day or so. It's moving along. I'm fooling around with stuff, but I will. Okay, let's see. The closing current price, more chance is real. Yeah, that is probably true, Lambrecht. I'd say that's true. Okay, I don't see any other questions. So Burning Desire is going twice. We're going to wrap this session up here. Any other final questions anybody has? Thank you for all the good feedback. Appreciate it. Keep it simple. Good. I appreciate that, Maria. And if you guys are going to integrate any of these things into your process, do them one at a time. Throw Auction Vista up there if you have Jigsaw, and take everything off of it. Don't use any of the things on the bottom. And then, try looking at the flip chart and see if that gives you any kind of an edge. And, try looking at the volume, or try looking at the volume is a really good way to catch high volume reversals. So if that's a setup you like, here's a classic example in gold right here. Let me just stretch it out. So, we had this move down here, and there's the liquidity, and there's a high volume reversal, and we went from what? 97, and now we're up at 1900 even. So a 3-point move at $10 a tick. So, and there's 10 ticks per point. Do the math. That's a really sweet high volume reversal trade entry right there. And you could do it strictly by looking at this. You need no other information. You need no other chart, nothing. All right, cool. And the one I'm referring to, yeah, it's one of my favorite setups too, Amy, because when it comes, you're right away and massively, or you're wrong and you get out of the way. But the one I'm talking about is this guy right here. That's a high volume reversal one. If you guys want to take a look at it, this is posted in the Slack. That one, you can see what the criteria are. Alrighty, Burning Desire is going 3 times. This will be the last time. Any final questions, comments? Anything anybody has, they have to ask me or Lee before we're done. We put up, oh, by the way, on the calendar, let me just mention this. I put up 2 things that are now on the Zoom calendar, and one of them is up in TRG. The other one will be up publicly. We are going to do a Saturday introduction, free preview of the next boot camp. That will be Saturday at 9 a.m. And that's just like we did last time. Lee and I are going to both do a preview. And then I'm going to do a live session on Wednesday, October 7th at 9:30. That's posted in TRG. I would love it if you boot campers or your TRG members would come to that. And, there's going to be, it's open to the public. We're going to have people that are considering doing the boot camp in the October 19th fall session. So, this will be a great session. So please come with your success stories and invite your friends, and we will be promoting it publicly too. So there could be a few hundred people at that, which will be a lot of fun. It's FOMC day, so we'll probably get some ebb and flow, and then we'll see price discovery right when the FOMC happens, and we're going to do all that live to the public. For all those people that say, well, if you guys are teaching, how come you don't trade it live? Okay. So here, we're going to. All right, guys, going to wrap it up. Thank you for all the great comments. Thank you, Lee. And we'll see you guys and whatever's next on the calendar. God, I can't even remember right now. Let's see. What is our next meeting? Is it that Saturday? It is. This coming Saturday. Free session. I will post that in Facebook and Twitter, and Lee's going to send out an email about that too. So invite your friends. All right, guys. Thank you. We'll see you later.